Australian households confronting a now all too familiar squeeze between a war driving up energy costs, threatening supply chains and the price of everything, and a Reserve Bank on a mission to crush inflation.
We understand that if there is another interest rate increase, it will hit households hard.
Even ahead of today's Reserve Bank rate hike, the war in Iran cast a long shadow over the government's budget preparations, which includes the question of whether to wind back tax incentives to property investors, with a Greens-led Senate committee report finding evidence the capital gains tax discount has skewed ownership towards investors.
The budget will have a focus on savings, it'll have a focus on productivity measures, and we're also considering issues around tax reform, and some of those, or in fact all of those, have an intergenerational equity kind of element to them.
But it's today's rate hike, combined with rising energy costs, that has everyone's attention, not least as it all but negates the relief to households from last year's 3 interest rate cuts. The decision made by a razor-thin majority of the Reserve Bank's board. 5 members voted to increase to 4.1% versus the remaining 4 who wanted it left unchanged.
I understand that this is tough news for people with mortgages. I understand that. And the fact that petrol prices are up so substantially as well is just another problem. If we don't bring the excess demand down, then businesses are just going to build that into their costs. So it's going to be even worse for everyone.
Today's decision means households will be hit by the twin forces of higher mortgage rates and fuel Bowser pain. The Reserve Bank Governor leaving no doubt the decision to increase the cash rate is the result of inflationary pressures that predated the war, which itself is more likely than not to boost inflation even further.
Even abstracting from the global environment, domestic inflation remains too high, and high inflation hurts all Australians.
One of the things that's happened really quite consistently over the past 6 months is that inflation has pushed up quite quickly and by a lot more than anyone expected.
NAB Chief Economist Sally Auld is predicting another rate hike in May.
It's most likely that we're now looking at an even longer period of inflation remaining above the top of the RBA's target band. We probably are looking at an ultimate increase in the cash rate of 75 basis points in order for the bank to be confident that they're getting a better balance between demand and supply in the economy.
The good news, according to the Governor, is that more Australians are in work.
The labour market is in a much better place than we thought.
Michelle Bullock's primary concern is that the central bank retains its credibility in the minds of Australians as an inflation fighter. Memories are still fresh from the post-pandemic and Ukrainian war-induced inflation spike that saw consumer prices surge nearly 8% by late 2022, followed by years of elevated price growth.
Up until 22 or so, people hadn't seen high inflation in decades, and that gave people a taste of what, if you let inflation get a roll on, how hard it will be continually for people. So it is hard, I understand that, but it is the only instrument we have, and it is important that we get inflation down.
For the Governor and Treasurer alike, the primary question is how long the war endures and how much damage it causes.
We don't want to have a recession, but if it's hard to get inflation down, then, we're going to have to deal with that, possibly.
The Treasurer Jim Chalmers joins me now from Parliament House. Treasurer, welcome.
Thanks very much, Sarah.
As we just saw at the end of Jacob Greber's package there, the Reserve Bank Governor was asked about the prospects of a recession. She said, if it's hard to get inflation down, then we're going to have to deal with that, possibly. Are you preparing for a recession?
No, that's not something that we're anticipating or forecasting or expecting. We are running a lot of scenarios at the moment, as you'd expect. We ordinarily would be in the lead up to the budget, but especially at a time of heightened global volatility and uncertainty. And so in the numbers that we are running right now, we're not expecting that outcome. But I think what unites what the Governor was saying and in the statement as well, and the private sector economists and certainly the government understands that there is so much unpredictability in the world right now. And yes, we had an inflation challenge before the hostilities in the Middle East escalated dramatically a couple of weeks ago. But though that escalation has made some of our economic challenges harder, and it's certainly dialed up all of this global uncertainty which is playing out in every country, including ours.
I just want to ask about some of those scenarios. Have you modelled for inflation that hits 5% as some of the banks have forecast?
Well, we're still doing the work, or Treasury is still doing the work on those forecasts. I think I've indicated on other occasions that if they put their pencils down towards the end of last week on those forecasts, the additional pressure on inflation, depending on how high global oil prices go and how long this conflict endures, could be something between 0.5% and a full percent, which would push inflation up between the mid to high fours. But you know, as I said in my answer to your first question, Sarah, this is a very fast-moving set of developments. It relies very heavily on how long the conflict goes for and then how long it takes to get the global economy up and running properly again, including some of these very sensitive markets afterwards. And so there's more than the usual amount of volatility and unpredictability. In that environment, we do the best we can with our forecasts. Obviously, what's happening, particularly in global oil markets, means that there is upward pressure on inflation, which the Governor referenced as well today. And it weighs heavily on global growth because of the sensitivity of some of these commodities, which are where we're seeing the big price spikes.
They're big numbers that you're talking about. In the big crises of the past, large amounts of government cash was spent propping up businesses, propping up the economy. But with inflation and growing debt, you don't have those options available to you, do you?
Well, every one of these shocks has been different. You know, we've had at least 4, and this might be the 5th major economic shock of the last couple of decades, and I've been involved in different ways in the policy response to those economic shocks, and each one of them has been different. This one, at this point at least, is largely an oil shock, which cascades through other parts of the global economy and impacts us as well. And so every response to every different economic shock is different. For our part, we are spending a lot of time, really most of our time, working through these supply issues in particularly energy markets, but also the flow-on consequences in areas like fertiliser and in other commodities as well. And so that hasn't always been a feature of these other big economic events we've seen over the course of the last couple of decades. And as the shock evolves and as the pressures evolve, so too do government responses.
Let's talk about today. There are already calls coming for assistance from truckers in Queensland, where you're from. Diesel there has hit $3. They want some sort of COVID-style government assistance to keep them going. Are you now considering a measure like that?
Well, first of all, I'm aware of that request, and there are other requests like it from different industries. We put a lot of effort in as a government, working closely with other ministers in other portfolios to understand these requests as they come in and to make sure that we consider them in the appropriate way. Now, that particular policy is not something that we've been working up. We're not anticipating having to do that at this stage. But like all of these areas, Sarah, because the environment is so volatile, then we make sure we listen to different industry groups and different parts of the economy, whether it's farmers, truckies and others, to make sure we're understanding their concerns, that we've got the ability to move quickly if we need to. But that particular policy outcome is not something that we've been finalising.
But you hit this oil shock in a very difficult position in terms of voter sentiment, who are starting to talk about the fact that they blame the Albanese government for what's happening to them, much less than they're talking about what's happening in Iran. What can you offer specifically in the way of relief to convince Australian voters that you are on their side?
Well, first of all, I mean, it's not unusual or surprising for people to have a political view like that when they're under this kind of pressure, and we're not just acknowledging that pressure, we're acting on it. You asked me about cost of living relief. We've got 2 more tax cuts to come. We're making bulk billing and medicines cheaper and more available.
Those are all decisions, I beg your pardon, those are all decisions that you've made in the past, and they don't appear to be shifting people's opinion on who's at fault here. What new is on the table?
Well, first of all, I mean, you as a political journalist can focus on the public opinion part of it. Those cost of living measures, some of them are rolling out in July this year and July next year, and so it's not quite the case, even though we have announced them, you're right about that, it's not quite the case that they're in the economy yet. We've got 2 more tax cuts to come, and other cost of living relief is rolling out right now, as you say. Now, you ask about the position that we enter this difficult period in. Let's focus on the economics of that for a moment. Yes, the global economy is under extreme pressure. Yes, that flows through to our own economy. We're not immune from that. But let's not forget the very strong fundamentals that we have as Australians. We have very low unemployment, very high labour market participation. Our economy is growing faster than any major advanced economy. We've got lower debt than all of them as well, faster jobs growth over the last few years. And so we won't be immune from what's happening in the Middle East and what's rippling throughout the world and its global economy. But we do have foundations that other countries would like as we enter this new period of difficulty.
Have you modelled what fuel rationing would look like?
Well, we're not anticipating going down that path. The modelling that we do is really about understanding the fuel levels, the stockpiles, helping that inform our decisions about things like releasing part of the stockpile, as Chris Bowen did at the end of last week. And so we do a lot of modelling, we do a lot of analysis, but it's not limited to that question that you're asking me about. It's really about informing these decisions that we're taking. And there have been a number of important decisions already: releasing 20% of the stockpile, relaxing the standards temporarily, the steps I've taken with the ACCC, working with industry to get fuel supply, particularly to regions. All of these things are responding to our best analysis of how this particular economic shock is unfolding around the world and here in Australia.
And just briefly, have any fuel retailers in Australia been price gouging?
Well, that's for the ACCC to determine. I mean, they convened all of the suppliers and main retailing groups today to get an explanation of what's happening with these prices. We've jacked up the surveillance of the suppliers and retailers. We've doubled the penalties and hope to legislate that in the Parliament very soon once the states agree to it and we convene the Parliament. And so the ACCC's got a really important role to play here. I know that Australians are suspicious about these price spikes that we're seeing at petrol stations around Australia. Obviously, the global oil price is playing out, but we want to make sure, and we will make sure, that people aren't being taken advantage of, and that's the role of the ACCC. We're giving them all of the powers, all of the funding, all of the penalties they need to do a terrific job surveilling the petrol market and punishing anyone who does the wrong thing.
Treasurer, thank you very much indeed for joining us.
Thank you, Sarah.